And welcome back to Stockcast. The market's looking shaky. Are we witnessing a dead cat bounce? Or is this the start of a real recovery? Intel also just shook things up with a new CTO. The WAR ETF is making headlines, and social sentiment on stocks is heating up, especially Tesla. Plus, we're breaking down what Bitcoin and the altcoins are really up to this past week. So strap in. This is going to be a good one. Welcome back to Stockcast, the market show for the average Joe. Whether you're a diamond-handed degenerate scouring the market for your next 500% play or a cautious investor looking for steady gains, we've got you covered. We break down the biggest market news, give our hot takes, and maybe, just maybe, help you make some money along the way. My name is Ethan, and I'm here with Brandon. We just want to let you guys know that we are here for you, so make sure that you like, subscribe, leave a comment about what you like down below and what we cover. So thank you for joining us. Brandon, let's get into it. We got a lot of fun things tonight, and we're going to just flow into some social sentiment stock mentions. So we've probably mentioned it a handful of times, but one of the tools that we've discovered that we really like to use is swaggy stocks. So swaggy stocks, it has this cool little tool called Stock Market Social Trends. And as you can imagine, I'm going to show you my screen here. As you can imagine, there's one stock that is outperforming all the rest.
That's a big jump.
Yeah. I mean, come on. Which, I mean, Tesla, of course, is in the news right now. Everyone hates Elon. They're all like, how can we sock it to the man? And unfortunately for Elon right now, he is the quote unquote man. And so everybody
love him or hate him.
Yeah, love him or hate him. That's swaggy stocks. Let's probably bring my screen back up.
Yeah, what's trending on there right now? What are some of the other names? You got Tesla, of course.
Yeah, we've got WAR. We're going to mention that or talk about that a little later, but the WAR ETF has 141 mentions.
Interesting.
SPY, it's 114.
Of course.
GLD, is that Gilead?
Let's see. What is that? GLD is that's the gold trust. So it's gold.
Okay, that makes sense.
Precious metals.
Yeah, everybody's trying to find some safe haven that's not the U.S. dollars. Put your U.S. dollar into a gold ETF, so it kind of defeats the purpose there. But Nvidia, of course, getting some mentions, and from there it kind of like drops to some typical, line. I don't know if is that Uline.
Was that LNE?
LINE line, yeah.
That one is, I've never actually heard of that one. It's real estate.
Okay. Gotcha. Yeah.
It's a REIT.
Okay.
REIT.
Real estate interest trust. I don't know. I don't know if is that really what it is?
Wait, no. A REIT is it's basically just a collection of real estate investments, I believe.
Okay.
Let's find out for the people. Real estate investment trust, yes. It's a company that owns, operates, or finances income producing real estate. And what it does is it allows individuals to invest in large scale real estate without directly owning or managing property. Yeah. So if you don't want to be a landlord, a REIT might be the move.
Yeah. Or if you believe in the global conspiracy that Dollar General or Dollar Tree or that family of stores is taking over via real estate then you maybe you could find a REIT that holds a lot of Dollar General
Yeah.
stock.
Yeah. I mean, it's hard to keep up with BlackRock, right? You might as well just buy a REIT.
Yeah. Dollar, I can't remember if it's Dollar General or Dollar Tree, but they consider themselves like a real estate company first and foremost, and then a retail
Really?
organization. Yeah. So they essentially, I might be pulling this out of my butt, but I think that they're like okay operating at a loss, so long as they, purchase some real estate at a good price, I suppose. But yeah, as far as the retail side of it, I think they're okay operating at a loss.
Yeah. Coming back to Tesla real quick, Ethan. I mean, that's clearly the top mentioned stock. So just want to touch on that real quick. I mean, we covered a few episodes back, kind of like that 270 level that was so important, and it broke down. Tesla's just been on this massive sell off since it hit its high back in December, and it was due for a little bit of a recovery because of the extensive selling, and basically, over the past couple days, it's showing that it's basically catching a bid. It's getting some buyers back in there, but it's still, I mean, on the daily chart. Um, I'll share my screen for those on YouTube, but it still looks extremely oversold, and it doesn't look great really. So if we take a look at the daily chart here, last week on Tuesday was a green day, and then we kind of held right around this like 247 level, but I guess you could call it a psychological level of 250. It's flirting with it. It technically closed on Friday at 249.98. So just 2 cents. Gonna get 2 more cents to close at that 250 level. So this week upcoming, with some of the economic data that we'll talk about later, it's going to be interesting to see how that impacts Tesla being a high beta stock. Are we going to continue to sell off? Are we going to get more of this relief rally? It'll be interesting to pay attention to. And, again, coming back to the options chain, as we like to talk about here, when we look at the IV percentile, it's kind of cooled off a little bit. It was pretty high. It's cooled off to 61%, which is nice. It's a bit more attractive if you're looking to buy options, calls or puts on Tesla. 61% percentile. It puts it in a space. I think last week, previous couple weeks, it's been up in the 90 percentile range, meaning only 10% of the time has the IV been lower. So now we're getting into that range where, 40% of the time over the past year, it's been lower. So it's starting to cool back down. And the reason it's cooling off is because we had, a few days of, more or less consolidation. We're not getting as many of these violent down moves. It was, oversold. But I'll be curious this week, Ethan, to see, if that sell off resumes, I guess is what I'm trying to say. So,
Yeah, yeah, and I don't know how like significant the candle size is, moving forward for stock, but I assume that with it being smaller candles, that we're seeing smaller up and down major price movements. So, like you said, it seems like it's consolidating.
yeah, we're seeing a contraction in the volatility of it. You don't see as many giant red candles or giant green candles for that matter. But I mean, that's only 3 days worth, really, 3, 4 days that it's been like that. It could easily resume and get some of that volatility back. But, from an option standpoint, it is becoming more attractive relative to what Tesla's, volatility typically looks like. So that can help.
Yeah. So let's transition then from Tesla to kind of the market in general. One thing that we're trying to look at is, are we bumping into a dead cat bounce, or are we going to see some broader market recovery going on? What are some technical indicators that shows us one way or the other? What you got?
Yeah, so real quick, dead cat bounce, right? So a lot of people talk about it. What does it actually mean, right? A dead cat bounce in market terms is basically a sucker rally. You could call it that. And it kind of stems from the idea that even a dead cat dropped from a high point is still going to bounce when it hits the ground. And so, in the markets, yeah, in the markets, we refer to dead cat bounces. In bear markets, when we've had extreme selling pressure, and even in those environments, you will get periods of relief, periods of where there is exhaustion, and we do see some buyers step in. But a lot of times, those buyers are not genuine buyers, meaning they're expecting that stock or that company or the market at large to go up. A lot of times, all it is shorts covering their positions. And so, that's a dead cat bounce. And so, really, after the way Friday closed, we're basically in a scenario now where we're trying to predict whether or not we are indeed seeing a relief, or excuse me, seeing genuine buying. The selling is done, it's over, or is this just simply a dead cat bounce? I'm of the opinion that we're looking at a dead cat bounce, and there's a couple reasons for that. One of which is we look at the daily chart on SPY. We were extremely oversold. Actually, if you look down here, there's a couple different indicators going on. Let me just take one of these off here just to kind of simplify it a little bit. So let's just deal with the RSI, right? So RSI is a momentum indicator. It kind of what it does is it tells you whether or not a stock is oversold or overbought. So anytime that you see this red here, this is a scenario where a stock is overbought. In this case, we're dealing with SPY. So back in June, according to this indicator, SPY was overbought, and then again in July. But if you look down here at the bottom, anytime we get below this 30 range, that is considered oversold territory, and it'll populate as blue. And you can kind of see it over here. We populated that just this past week. And it was the first time in the past year that the RSI has been that low. So we technically hit, some oversold territory on SPY. And then, of course, following that, we did get some participants that came in on Friday. We had a nice green day on SPY. We were up over 2%, but we are still below the 200-day moving average, Ethan. And then also that level here that I marked out for everyone, sitting at about 565. We are still below that as well. So I'm of the opinion this is very simply a dead cat bounce. And the futures markets right now overnight, if we take a look at the SPY, the E-mini, it is down right now about 40 basis points. And you also have the NASDAQ, the Dow, the Russell futures also in the red. And you have the futures volatility index that is up. So we're looking like, at least as of right now at almost 10 p.m. Eastern, we're going to have a red open tomorrow. So I'm of the opinion this is a dead cat bounce. What I would be looking for to kind of prove that theory wrong is I want to see that we can get above the 565 level here and hold it. And then, of course, following that, get back above the 200-day moving average. But we're about 10 points off from the 200-day moving average. I don't expect to see that move this week personally. So yeah, I think this is just a dead cat bounce. You got to be careful with these because a lot of suckers. It's a sucker rally, Ethan. That's what they call it, and it's because you got a lot of new individuals to the market, a lot of newbies. that would see this and think, oh, this is the bottom. Trying to time the bottom in the market is just it's damn near impossible. It's never really a good idea to do it. You need some more confirmation, and so really, I think smart money is waiting for some of these suckers to come in, try to time the bottom, and then they're going to flush them out. So I'm expecting more selling pressure this week after that Friday dead cat bounce.
Okay. I like it. So we've got some major shifts coming up. Probably, in your opinion, going to be a small rug pull, and then
Yep.
yeah,
Yep. That's what I'm expecting until I see something otherwise on the macro level. I mean, I don't really have any reason to think otherwise, I guess is what I'm trying to say. The trend is clearly down right now. And yeah, I would expect that to continue. So
so if you have any puts, hold on to your puts. Don't roll them into calls. Uh, yeah.
yeah, that would be my advice. We're not financial advisors, but if it was me, that's what I would most definitely be doing. I would, really what a dead cat bounce is, Ethan, it's a good entry point for some puts, right? Um, Buying into some of that resistance that ends up happening after you get a dead cat bounce is an excellent way to enter a short um, position. Any kind of puts that you're buying, betting on the market going down. It's a way better entry point, and it makes it so your risk is a bit more defined. If you're buying at a resistance level, if it goes above that, that's your exit, and then of course your opportunity to the downside is there. So that's how I'll be playing SPY this week. I'll be looking to get some good entries on some puts. So um, all right. So moving on, next segment. So Ethan and I talked about what is something new, something relevant that we could bring to the show. And in light of March Madness, for all my basketball fans out there, we obviously had Selection Sunday today. And so Ethan and I are going to start a new segment called just that, Selection Sunday. We're going to pick up a stock based off social sentiment, based off what's hot. And Ethan and I independently have done some research on a company, and we're going to bring it to you for just a brief breakdown of a particular company and kind of give our insight into it and what we think may or may not happen. The whole purpose of this is to kind of help you as an audience kind of get an idea of a stock's fundamentals, and from a technical standpoint, where it's at on the charts and what we could be seeing in the near future. So to kick off Selection Sunday on its debut tonight, we are going to be diving into Intel. INTC is the ticker for that. This company right now has been in the news of late due to a few different things, really. It's got a lot of social sentiment on websites like Swaggy Stocks, on Reddit. A lot of eyes are on it right now. So it's hot, it's trending, which we love. You don't want to, in my opinion, waste a lot of time on trading stocks that don't have, social sentiment, high volume. You want to be involved in the things that are moving that everyone else is watching. That's how you get volatility and movement. So Intel is definitely one of those. And part of the reason for that is they appointed a new CEO. So I pulled this up from the Motley Fool. Intel gets the outsider CEO it desperately needs. So after months of searching for a new CEO following the abrupt retirement of former CEO Pat Gelsinger, Intel has landed on Lip-Bu Tan. Tan led Cadence Design Systems, a provider of software for designing semiconductor chips, for more than a decade. He also served on Intel's board of directors during Gelsinger's tenure, resigning due to reported disagreements with the company's strategy. So Intel has a new CEO, and they're looking to essentially revamp their business. There was a time not long ago when Intel was the dominant player in its core central processing unit, CPU markets, that it didn't need to listen to customers. So basically, back in 2015, Intel controlled more than 90% of the server CPU market. Rival AMD could largely be ignored, and Intel was essentially thriving. But it kind of got behind the eight ball, and some things have kind of come up over the past, I guess you could say, 7-8 years, Ethan, where Intel has, kind of dropped off as far as competing in the space. They entirely missed the boat on AI accelerators, and basically its efforts to catch up had fallen short. Basically Intel's manufacturing operations stumbled as well. They had near endless delays with some of their processors, and they basically got passed up by Taiwan Semiconductor Manufacturing, which overtook Intel's technology at that time. Basically at this point, what Intel's looking for is a turnaround. They're looking for a turnaround. They were basically in a position where they didn't need to listen to customers' feedback, because they were just raking in the profits back in like 2015, right? And so I think the idea with the new CEO coming on board, is that Intel needs to listen to its customers. At least that's the opinion of the Motley Fool, that they need to, take the approach of, hey, what do the customers want? Because they're not the leader anymore, right? They're not in a position where they can just, sit back, and rake in the profits and dividends and things like that. They're in a position now where they're not the leader, and they need to get some feedback. So that's about what I have on Intel, Ethan. Be curious to hear what you dug up on it. Before you do, though, one thing to note, CEO is getting paid. So according to CNBC, Intel's new CEO receives $66 million in options and stock grants on top of a $1 million salary. So my boy is getting paid to rebuild Intel.
Yeah, he's getting some serious bands. What was the name? Because I couldn't help but crack up at this this person's name. I didn't think you were being serious.
No, no, I was being serious. It's Lip Boo Tan. Yeah, it's a very, very unique name. Very unique.
Yeah,
And my boy Lip Boo is getting paid. That's what I know.
yeah. Lip ain't need no lip. I don't know. I don't know
No,
what that even means. I'm moving on. So
neither.
Intel, the things that I found out, which I feel like is very significant, is that Intel was founded by Robert Noyce and Gordon Moore. If you've ever heard of Moore's Law, have you ever heard of that? It's a very significant, I guess, law in the microchip world, where they roughly double in computing power uh, every year, every 2 years. And we're kind of, I wouldn't say we're coming up to the apex of that, but we are starting to kind of level out, I think, is kind of the sentiment. But um, so I thought that was interesting. So, of Moore's Law fame, and whenever, if you're like into like computer gaming and building your own PC and whatnot, it's important to know that you're either a blue dude or you're a red dude. You're either going to get the blue chip, which is Intel, or you're going to get the red CPU, which is AMD. And in the 2000s is kind of where the market shift happened. Because Intel, they had a less efficient and a hotter processor that they continued to push onto the market. There was the Pentium 4 chips, and that probably co uh, or rather probably parallels to what you were mentioning, where they were like, "Hey, we're the hot dog on the market. Like we don't need to take any feedback from anyone. So that's probably the misstep that you're referencing, or maybe one of them. And so Intel got passed up by AMD around then because their chip architecture was smaller. And this was interesting too, though, from a like technical like stock standpoint. They pioneered stock buybacks. So they were one of the earliest companies to like aggressively use buybacks to boost share prices.
That's
Uh,
interesting.
yeah, and over the last 10 years, they've spent 116 billion on stock buybacks. Now, compared to Nvidia and AMD, though, their stock has barely moved compared to them. Uh, they've they're definitely, if you look at their long term, and I'm sorry, I can hear some of that feedback coming through. Um, if you look at the chart, I mean, they hit 76 in 1999, transitioning to 20 or the early 2000s. They're trading around 75, $76. Uh, so their heyday, they're definitely not living in their heyday anymore. Um, some other things, when you think of somebody capturing the market, you can definitely think of Intel, because anytime you would open up your laptop, what would you see? You would see that blue sticker that said Intel inside on the bottom left or something. Um, so they were definitely like kings in the space, and they've kind of gone down from there. Um,
Yeah,
it looks like
they're
they're building some foundries in the U.S. to compete with the semiconductor arms race in like overseas and whatnot. So that'll be interesting.
Yeah, from what I've understood, Ethan, to touch on your point with the foundries, I don't believe the new CEO has any intention on doing away with that. I think he, especially since he was on the board, he wants to keep things, um, basically the same. But again, from what I gather, they basically need to take the approach where they need to get customer feedback. AMD kind of took over as the top dog there in like 2017. Like you were saying, they kind of lost to AMD in that regard, and then they were kind of slow to hop into AI technology. But I think I saw something that said the new CEO is most likely going to have some additional layoffs for the company. So they want to trim the fat a little bit. Um, and I guess from a charting standpoint, it's like you said. I mean, they're generally speaking, the stock doesn't move a ton. You got some, I mean, look at the stretch here from like April to like July of last year. I mean, there's not a lot of movement here. It's not as volatile as Tesla, that's for sure. um, but obviously we had this massive gap up over the past couple days with the CEO news running into the 200-day moving average, and then we have this gap here on the chart from the 28 level that was back in August, right? So from a technical analysis standpoint, what I'm looking at, Ethan, is for this gap to get filled. Generally, gaps do get filled, whether it's to the downside or the upside. So I think it's got some space to at the very least, close that. But first and foremost, it's got to get back above the 200-day moving average, and then with the overall market, in this correction mode, not really sure if that's going to be a much help to the stock itself. But this is definitely more of like a long term proposition for the new CEO to kind of turn around the company, right? This isn't going to be like an overnight thing. Obviously, you had the reaction to the CEO news, and that's great for the stock price, but that's going to kind of level off. It's going to get priced in, and I don't expect to see massive $10 swings on the intraday chart for this company. But if you're looking for something to invest in, I guess, on the long haul, this is a company with a new CEO in place that I would definitely be interested in. And not to mention, Ethan, they do pay out a dividend, which is you're going to be hard pressed to find that in the tech space. Tesla isn't paying out dividends. They're focused on growth, which is pretty common for a lot of tech companies. So it's interesting to find something like Intel, that does pay out a dividend. It was in the Dow, got dropped out of the Dow. And so I'll be curious to see, I guess, what the future holds here for the company.
Yeah, I was interested to see what their numbers looked like. I'm going to take over the screen share here if you don't mind. This is what our old faithful Chat GPT could pull up, is that their full-time employment numbers over the years, they definitely were reaching a high around like 2021, trimming the fat. We'll see them take down like another 10,000 employees or something just to get back down to like 110 or something like that. But I mean, and that's kind of the standard operating procedure for tech companies recently, is just like trimming the fat, like you said, getting rid of employment or overhead.
Yeah, and I think as a company, they had such utter dominance, like 5-7 years ago. They're not really in a position where they can, just rest on the, utter dominance, because they don't have it anymore. So really, I feel like they're in a position now where with a new CEO, they have to take risks. You know, they have to, they really need to take an approach that's a bit more aggressive, to kind of turn things around, compete with some of the bigger players like Nvidia, like AMD. And really, I was taking a look at, those companies as well. Obviously, Nvidia has been, selling off, and then on Friday it had a nice little turnaround. I think the long-term outlook, I think you would agree with this, Ethan, for AI is still massive. It's kind of getting clouded by this correction the market's in right now, but don't be fooled. The long-term outlook for AI is massive. And I think companies like Nvidia, like AMD, they have bright futures if they continue to innovate and focus on the AI piece. And I think there could be a portion of that market for Intel. Again, if they take risks, if they listen to customer feedback, and this new CEO really puts his foot on the gas pedal, so to speak. So,
Yeah. Yeah. And speaking of war and speaking of risky things, well, speaking of risky things, let's talk about war.
good transition.
Yeah. The WAR ETF, we mentioned it at the beginning, but that's another one of the swaggy stocks mentions for social sentiments. Um, they were just incepted, I guess you could say that. Their inception date was December 30th, 2024. So they've only
Pretty new.
been, yeah, very, very new. They have net assets of over 3 million. Their ticker again is WAR. If we look at pull it up here, their prospectus, they're the U.S. Global Technology and Aerospace and Defense ETF. So some of the word I'm looking for is escaping me, but the composition of its fund is aerospace and defense companies. So 25% of its assets will be in the aerospace and defense industry. Then there's cybersecurity companies. Browsing here, it doesn't say how much of a percentage it'll make up for that. And yeah.
I wonder
Uh,
what the free flow. I wonder how many shares are available of it. Because it's like so new.
yeah. Let's see if it says, or if you can probably quickly find that.
Yeah, I'm trying to look it up right now.
We're
But
doing a
anyways,
lot.
it's a hot social sentiment ETF right now. There's a lot of talk about it, so there's a lot of eyes on it.
Yeah. So if you look at our And I haven't looked at the social sentiment. I haven't looked at why are people mentioning it. I haven't looked at what any of the tweets are saying. Do people love it? Do people hate it? But it's probably just because it's so new. But then there's also kind of the it's not catch 22 is not the word I'm looking for, but I mean, you're investing in a ETF that invests in what its ticker says, WAR. It's kind of this like, you know, philosophical juxtaposition where you're like, well, if I'm investing in this ticker that's in the aerospace and the defense industry, am I also contributing to those events that are happening on the world today? But um, I'm not sure. I don't know if me putting $1 in the war ticker is really going to change whether or not anything happens in Ukraine or not. But some of the other assets or the holdings that they have is Rhine Metal AG, which is a German company. They've got 180 shares held. General Dynamics, Applied Materials, NVIDIA is actually in this as well. Um, of course, Booz Allen. I think that's how you say it, Booz Allen or Bose Allen. Um, a lot of companies that you'd expect. But then also they have like Dell Technologies and Hewlett Packard. So I'm not sure.
Yeah, it seems to be primarily from a sector standpoint, technology and industrials. But something to pay attention to. I mean, generally, when you see stocks with high social sentiment that move a ton, they're actually, individual companies. Um, so it'll be interesting to see how this one moves being an ETF, right? So it's a little different. It's like SPY, it's like Q, it's a basket. It's holding a basket of various stocks. I do like that they have Nvidia in there though. So yeah, it's interesting because it's a new inception. It's very new. Generally, when you see stocks that are like new IPOs, they're very volatile. They have extreme moves up and down. So this will be one to keep an eye on to see if it starts to get some traction. Right now, it's trading at $20.27. Its all-time high was back on January 22nd at 21.74. So, and I believe no, there are no options on it, so you can't trade options on this one, Ethan. So you're buying up shares if you want to play with war.
What's the point, if you can't play with options?
I mean, yeah, I mean that's kind of. I mean, I guess you don't have to worry about time decay, so that's nice. But yeah, generally, especially for ETFs, I'd rather have options. But I bet that's something they'll probably add in eventually, especially if it starts to get more volume, more attention on it. They may build out an options chain for it. So
Yeah. The only time decay you have to worry about is the decay of your soul as you invest in war.
yeah, it kind of is a controversial ETF, right? Because you're essentially banking on global turmoil,
Yeah.
you know.
Yeah.
So
Unless you're like, I'm banking on this in order for global turmoil to not happen because we have such a strong like investment in these companies that are just like strong arming the world.
that's true.
Or you could just say, I'm just totally I'm Tony Stark in it. So you just infantilize it, turn it into like a juvenile joke, and just think that you're like playing with like Tony Stark money. But anyways, let's look at the calendar for the week, the economic calendar. We've got some fun stuff coming up. We've got the looking here. Let's share my screen.
We got some big ones this week.
Big ones this week. This is coming from tradingeconomics.com/calendar. It gives you a, kind of pulls the forecast data for what they're expecting to come out of some of these meetings and whatnot this week. And so every single day, there's some very significant for whatever industry you're in. Maybe you love ports, you love imports. Well, hey, your import prices are coming in Tuesday at
Boom.
8:30. Month over month, we're going to figure it out. Um, some things to look out for. We've got the Fed interest rate decision on Wednesday at 2 p.m.
That's
Uh,
huge.
Interest rates, as you can see here, have been dropping, but we'll see. They're forecasting a 4.5%, so just staying steady at 4.5%, which that kind of like tracks. But we'll see. Hopefully, we'll get some good, you know, forward thinking outlook out of that. Also, existing home sales on Thursday, March 20th at 10 a.m. Your home sales, they're a great indicator for whether or not your economy in general is growing or slowing. Um, the previous was 4.08 million. I'm not sure how to define consensus in this case. I don't know if that's
So the consensus would be what the overall market is expecting, I think, right? Consensus. It's like the general, like, it's probably going to be this.
okay. I gotcha. And then forecasting growth in the 4.05 mil. So as you can see on this chart, the existing home sales has had its own little dead cat bounce. So that's yeah.
Yeah, I
Uh,
think.
go
Yeah,
for it.
sorry. I was just going to say, I think Wednesday is going to be massive. You get the Fed rate decision that's coming out, everyone's waiting on, and then Daddy Powell, I think, is talking at 2:30. The decision comes out at 2, and then 2:30 is when he talks. So I've traded some of these days in the past when the decision comes out. The actual decision itself is generally not what moves the market. It's when Powell gets up there, right? Is he gonna bring out that money printer, or is he gonna say something that scares investors? Everyone's gonna be paying attention to that, but that's at 2:30. Definitely something you want to have on your radar because it's gonna bring some volatility to the market. So
Yeah, I think it's going to keep those purse strings tight, but
I do
we'll
too.
see. Yeah. So that's economic calendar. What do you have for earnings calendar this week?
Yep. So we got some earnings coming out this week. Quite a few names on here. As far as things I'm looking at to, potentially trade though, we got Nike after the close on Thursday. You got Micron after the close on Thursday as well. Those are two of the more notable ones that I'll be paying attention to. I thought this one was kind of funny. What a name for a weed company, right? High Tide. I like that. So that's after the bell on Monday. But yeah, these are all your notable stocks. So if you got any positions in these, make sure you manage your risk accordingly because earnings can be pretty volatile. And then from a discretionary standpoint, you got Carnival reporting on Friday as well. So that is your earnings calendar for the week of March 17th.
Like it. Not a lot of big like names besides Nike on there.
Yeah, nothing too juicy. We got all the big names in the prior weeks, right? We had Nvidia, we had Walmart, kind of winding down as far as like earnings season goes, right? Most everyone's kind of reported for Q4 of last year. But before you know it, it'll be time for those Q1 reports to come out for this year. So
I think we're probably entering into a small season of like the quiet before the storm.
yep,
Uh, yeah. So
yep.
okay, well, that's all I got. Everything you got?
I think that's it. That's it. We'll be back midweek. And it'll be good too because our next show will be right after Jerome Powell has his talk and we get the Fed rate decision. So we're going to have plenty to talk about midweek. Please like and subscribe, drop a comment, let us know what you want us to cover. Hey, if you got a stock you want us to cover for Selection Sunday, let us know. We will break it down and give our 2 cents on it. But yeah, that's all I got.
Then we'll do a little tier list after we get enough companies. We'll
Yes.
just see who wins out. But that was today's episode. We talked about a little bit about retail sentiment from swaggy stocks, looked into some technical and fundamental analysis on Intel and its corporate shakeup with its new CEO. Then we looked ahead at some of the economic calendar and earning calendar events, as well as doing a little deep dive into WAR ETF. So thank you everybody for checking us out. And we hope that you have a wonderful trading week. And as always, like we say, plan the trade, trade the plan. Thank you for joining us.